OpenAI was the first big check that you wrote, right? And
we wrote the first very large check in OpenAI that we've done. Yes. First venture capital firm, along with some individuals.
So fast forward to present day, there is a hype cycle around artificial intelligence. And half of your field of VC peers talk about, well, we've been doing this for a decade. And then half are getting into it anew. How do you assess what's happening?
Well, everybody wants to get on the bandwagon because it is a major trend, and it is a major trend. So not surprising people claiming they've been doing it for a decade. I wrote about it extensively about 10 years ago, and then 4 years ago we invested in OpenAI. 5, 6 years ago we had a whole bunch of other startups we invested in the same area. And so it is an exciting trend. It is hard to predict exactly how fast it is developing or how fast it will develop. Every day you see new changes. But it is exciting. And it's exciting from both a business point of view as well as a technology capability point of view.
Is OpenAI the only game in town? Is it just the clear leader in this field right now?
No, in America, there's a lot of interesting startups in this area. Google, of course, is a very credible player. And then there's other startups that are credible, too, trying to make a go at it. I think the leader always has a huge advantage.
What about leadership coming from China, Vinod? Because I know you keep a keen eye on what you really see as a competitive threat, the new war of the next couple of decades, techno-economic.
Oh, absolutely. I probably worry more about a Chinese AI doing bad things than anything to do with AI itself going sentient or the kinds of things Elon Musk talks about. Not that that's not a concern. China is going to be our big enemy in this. I believe we are in a techno-economic war with China for economic dominance and hence dominance of political systems to go with it.
Okay, so do the risk reward for us here at the moment, or balance the risks. When you're talking to regulators, as you have done, if you talk to people in power, you've been over there in Washington, you had a coming together, of course, the Hill and Valley Forum, where you gathered VCs and tech community to talk to, well, government. Do you want them to regulate how we use AI in the wild in the US at the moment, or are you more worried about the regulation of China and money flowing there to build their own AI?
Well, I'm much more worried about the competitive picture with China than about regulation here. I think it's too early to regulate AI. We don't know enough about it. I do think we should heavily fund safety research, especially in the universities and third parties. But regulating it would be a real mistake and put us behind China in the race.
And the race, it does feel, is something that VCs, that Peter Thiel, that Vinod, you're talking about, Ed, and also a relationship that's being built a little bit more firmly between DC and Silicon Valley, where you sit.
Yeah, I think for me, you know, the question, Vinod, is what was the upshot of the Hill and Valley Forum? You know, that we reported on it, we discussed about the relationship between DC and Silicon Valley. What has happened as a result?
Well, there's clearly a lot of interest in this question, not only AI and AI regulation, but equally importantly on our AI race with China. My interest is highlighting how important that issue is and how much we should focus on the race with China for technology supremacy here. I do think there'll be multiple players, but I do think there will be winners that take a disproportionate part of the economic pie. And I think the U.S. model is well set up for it, but it's not obvious that we can win or we will win in 20 years from now.
You said economic pie, so I'm going to do a small pivot. There is a Fed meeting today. We expect a 25 basis point hike. We talk daily about tighter financial conditions. A VC of your experience and your scale, how does that impact the ecosystem that you are operating in?
Well, Fed rate hikes affect short-term things. You know, when we invest in OpenAI 4 years ago, we don't expect liquidity for 6, 7, 8 years. So I'd have to predict the market in 2030 and the Fed rate in 2030. to really have it impact our district.
Very popular within this organization if you could.
So my goal is really to focus on what adds substantial societal value and because of that economic value, and what will be true in terms of real value add to society in 2030 if I'm going to make good investments. So our focus is much longer term than short-term interest rate hikes and all. Now, that enable more or less financing to happen in the interim, so we do pay attention to it, but mostly we ignore it.
Yeah, financing in interim. I mean, Caroline, for all the volatility in public markets and from a policy perspective, we see checks getting written by VCs to venture-founded startups. And
largely in the realm of AI at the moment, Vinod. To that extent, are you writing a lot of checks? What sort of size of company are you most looking for at the moment in this new environment?
We are writing a lot of checks. We are being aggressive. But I would say there's many more bad AI startups than good startups. And it's very hard to differentiate if you're not experienced with AI. So I do think lots of bad investments will be made, but overall, more money will be made than lost. Even if 90% of the startups fail, which they will.
Interesting. And of course, that's often the bet. Look, that you will have failures, but you'll then have from those absolutely extraordinary success that gives the money and the returns to VCs. But Vinod, in this current environment, we're talking a lot about so-called zombie companies, the companies that have massive valuations but can't vindicate the growth at the moment, having to make cutbacks, having to think more about revenue driving, profit driving. What are you doing with those companies at the moment that just had huge valuations that perhaps don't have the run rate that they used to?
Well, there are clearly founder choices to be made. Good founders are responding to the environment by saying, let's ignore what happened in the past, let's ignore our old valuation and focus in on how we create value for the next few years and not worry about what the valuation was. So founders have to fundamentally decide whether to cater to investors or to the reality of the business they're in. And most of the good founders I know are really focusing in on what they need to do to build a great business and hope that investors will get on board later and not worry about short-term perception of valuation.
There are other deeply technical areas that you are passionate about and that you are investing in, climate or energy related, and one of them is fusion. You've written op-eds about this. Because AI has dominated headlines, we talked about it less, but can you just explain why you're so focused on that area?
Well, if you look at Commonwealth Fusion, which is an investment we made about 5 years ago, before there was a company, actually. We started working with Bob Mumgard when he was a senior fellow at the MIT Fusion Lab. It was very clear. If you crack fusion as a technology, it was one of the largest markets in the world, much, much larger than, for example, Google's market, because energy markets are very large. And so that is exciting. You can lose 1 time your money, you can make 1,000 times your money. That's a pretty good trade-off.
Vinod, we're up against commercial break, so very quickly, is it a good time to be a venture capitalist?
I think it's a great time to be a venture capitalist. Most of the large companies are cutting off their advanced projects. And so the best people leave to start companies. That's the raw material we need, great talent. And there's plenty of capital. So it's a great time. The next 5 years will look really, really good.